Now, I've been very honest with you guys as of recently, telling you that I have personally been adding some ULTY, the Yield Max Ultra Option Income Strategy ETF, to my long-term portfolio, not because I would consider myself an ultra high yield investor. I mean, I'm very far from that. Across my entire portfolio, I probably have a weighted yield of 6, 7, 8%. But because ULTY has some massive potential, especially if we stay in a mega bull run era like we're currently in, some of the names that ULTY buys into not only have a ton of upside, but have extremely high implied volatility, which means that the distributions can be massive for a while. But there is something new that I came across that has been exposed when it comes to this ETF that I did want to share with you guys, especially if you're like myself and you own some shares of it. I'm actively even trying to buy more shares of it if the market ever dips. All that to say that if you own this one, or maybe plan on owning this one, make sure to stick around, drop a link down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, just so we're all on the same page, ULTY's investment objective is to seek current income. I think a lot of you guys already know that. The secondary investment objective is to seek exposure to the share price returns of the underlying securities, which are going to change quite often. As of right now, we have names like abbvie, Affirm, etc. Because the names in the underline of ULTY are extremely volatile, this ETF does have the potential, and at least as of recently has paid out a massive amount of distributions, so much to the point to where if it kept paying out the same amount that it's currently paying, it would only take investors like a year plus to return their entire initial investment back. But I came across this article from seekingalpha.com. This is from the Alpha Analyst. It says ULTY downgrading to a hold as structural flaws surface. Getting right into the article, the structural issues, which I'm sure you guys might be interested into. I definitely am. It says the only angle left for ULTY to shine is a mega bull run in innovation, like what we saw in 2020 to 2021. But there are structural issues limiting such supportive regimes, imparting outperformance to ULTY. This is why the innovation names and most high-risk, high-volatility names usually work on short, sharp rallies rather than prolonged bull markets that move up steadily. Say I have an innovation bet proxied as MSTR. If you look at its price graph in the past 5 years, you will see the close to an 800% share price jump from 2023 critically happening in 2 sharp up moves. The first such move lasted only a month from mid-February to mid-March and drove up MSTR around 160%. In this period, here is how an option play, an MSTR, would have worked. At today's volatility levels, an at-the-money call for September 12, 2025, strike price 405, and a month out is trading at $28, i.e. roughly 7% of the share price. Even if MSTR surges 160%, my gains will be locked in at 7% because beyond $28, the option position will limit gains. Net result 7% of a 160% rally captured. The second such up move in MSTR was in September 2024, for example, to November 2024. This time a 260% rally spread over 3 months. Even if I could capture 7% every month, I am left with a meager upside capture compared to the overall rally. This is how growth names usually work. If they had gained 7% every month, my option strategy would attract them quite well. Now here's the bad part, here's the more important part. If we look at things like the drawdowns from December 2024 to February 2025, MSTR went down around 40% in over 3 months. Since put premiums are usually higher, currently around 9% of the share price for a volatile stock like MSTR, I would have been able to absorb around 25% of the 40% drawdown at best. And this is in the scenario of a relatively prolonged drawdown. Any sharp crash of 30% in a month and investors are soaking up more than 20% losses while not rebounding as sharply because, of course, that capped upside. The fallacy of the option strategy is all the more stark for high volatile growth names. In fact, investors end up assuming most of the risk while not benefiting where high growth usually works, and that is the sharp uptrends. They then said incremental performance. There is nothing more important than empirical evidence for a strategy like ULTY. One, because the definitions of at-the-money strikes are sometimes subjective and require active judgment. And 2, because how the underlying holdings interact in a multi-component portfolio for income is sometimes difficult to predict theoretically. Although the theoretical advantages and drawbacks are easy to predict, actual performance is where I derive most comfort from for ULTY and similar option plays. Incremental total returns since my last article actually tells a reverse story of my thesis. ULTYs outperformed YMAX. This is because, as we have seen before, ULTY works better on a slower bull market, like we have seen since the end of May 2025. This outperformance may be attracting more AUM in ULTY. It may seem counterintuitive that I'm revising my rating to hold when ULTY has actually outperformed, but the historical performance over several months is the decider when we're looking at empirical data. Preferably over various kinds of markets, ULTY's superior performance in prolonged bull rallies is often diluted over the long term, as we saw in the data overall since ULTY's inception. Now lastly, this writer says the use cases stand but not a buy. Some of the use cases I had earlier evaluated in my last analysis still stand. ULTY's tactical use for short-term flats to correcting markets may still work. ULTY may work in an innovation-driven rallies, i.e. high risk on rallies. The higher yields also help quicker de-risking, enabling payout deployment elsewhere. However, some of its use cases, like riding a less volatile innovation-themed portfolio, are not very valid because such portfolios usually work in spurts of growth. ULTY may outperform in these zones, like in the past couple months, but when the risk return, ULTY suffers more than it delivers on the upside. I see better alternatives that provide better drawdown management than ULTY and a better total return profile over a slightly longer term. YMAX being an example, if not a DIY systematic withdrawals on the Qs and the SPY. ULTY's risk-reward profile is skewed, for which I rate it as a hold. Now, there's a lot of good points in that article that I want to go over and talk a little bit more about, because again, you have to look into ULTY a little bit deeper than just that shiny 86% distribution rates. Because this ETF does hold on to ultra volatile names, even if they're holding on to them short term, there is going to be the potential for massive income generation, which is of course going to cushion the downside and lower your cost basis a lot quicker. But if we see sharp market declines, names within ULTY are also going to drop rather quickly, most likely. And because of this ETF strategy, it's going to be hard for the ETF to recover from there. Now, because of that, the writer of that article was basically saying that the risks are pretty high with ETFs like this, and the upside are not necessarily as high if you were to just buy into the underlying, etc. I mean, a decent example of this is if you were to stack up Coney next to Coinbase, the underlying single stock. Even though Coney on the max time frame has returned 128% over this time frame, which is very impressive, the underlying Coinbase has returned almost 300%, making that almost 3x the total return over the same exact time frame. So even though these ultra high yielders that hold on to or offer exposure to reference ultra high yielding single stocks or basket stocks, even though they can offer massive total returns that can, generally speaking, even beat the general market, the underlying names within the stocks sometimes are better off being held just because they're going to recover a lot faster if, of course, they do recover, like we've seen Coinbase do multiple times. Now, that being said, if you're a high yield investor that just wants to build out a portfolio of different ultra high yielding ETFs and sort of look at them as an annuity, looking at them as a position in your portfolio that you're trying to receive as much income as possible from and not necessarily worry about the actual net asset value, etc., then I could definitely see the arguments of holding on to these ultra high yielders even if they underperform the underlying and even if they offer more risk in the underlying, etc. Either way, I think it's important to know exactly what you're buying into and do as much research as possible on your own, especially when it comes to these ultra high yielders that do offer the potential for massive income, some upside, and also the potential for some massive risk. All to say, I'm still bullish on ULTY strategy. I'm still gathering more and more shares of this ETF for my portfolio, but again, in a very small fashion compared to the rest of my holding. So now that we talked about some of the risks, some of the rewards when it comes to ULTY, the YieldMax Ultra Option Income Strategy ETF, I lastly, most importantly, have a question for you guys now. Have you personally been adding more ULTY to your portfolio? And if so, how many shares do you have across everything as of right now? Let us know in the comments down below. If you guys enjoyed this video, make sure to please drop a like on it and subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.